Hey there, fellow gold bugs and energy enthusiasts. Today we're diving into the fascinating interplay between oil prices and the gold market, and how the recent drop in oil prices is lending support to the gold rally. Now you might be thinking, what's the big deal about oil prices and gold? Well, let me tell you, it's all about the delicate balance between geopolitics, inflation, and central bank policies. So buckle up, because we're about to embark on a wild ride through the world of commodities and currencies. First things first, let's talk about the oil market. We've seen oil prices fall for 2 weeks in a row, thanks to renewed US-Iran diplomacy and the potential reopening of the Strait of Hormuz. Now you might be thinking, big deal, right? But here's the catch. This isn't just about the immediate supply fears being eased. It's about the broader implications for the global economy and inflation. You see, when oil prices drop, the cost of manufacturing and transport goes down, which cools broader economic price pressures. And that's where gold comes in. Gold and silver are at a crossroads, torn between geopolitics and Federal Reserve monetary policies. While heightened geopolitical tensions traditionally drive safe haven demand into bullion, the war has stoked inflation fears at the same time. This has left traders weighing the protective appeal of precious metals against the rising opportunity cost of holding non-yielding assets in a high-interest rate environment. Now, here's where it gets really interesting. Falling oil prices help support gold rallies by easing inflation fears and encouraging central banks to lower interest rates. So when crude oil prices drop, the cost of manufacturing and transport goes down, which cools broader economic price pressures. And that's where gold comes in. Now let's talk about the bigger picture. The International Energy Agency (IEA) has revised global oil demand in 2026 downwards by roughly 1.1 million barrels per day, thanks to demand destruction amid higher oil prices. Months of acute shipping bottlenecks and physical supply disruptions in the Middle East have weighed down industrial activity, triggering a significant pullback in fuel consumption, particularly across Asian markets. Meanwhile, OPEC Plus recently approved a final quota increase of 188,000 barrels per day for September 2026, concluding the phased rollback of the 1.65 million barrels per day voluntary supply cuts first agreed in 2023. But a separate layer of 2 million barrels per day in cuts implemented back in 2022 remains active through the end of the year. So, there's a lot going on in the oil market, and it's not just about the immediate price movements. Now let's talk about gold. Spot gold has surged over 4% to trade near $4,250 to $4,270 per ounce, gaining roughly 6% this week alone. The sharp rebound is directly linked to the pullback in crude oil prices. But it's not just about the oil market. Weaker than expected U.S. macroeconomic data, including soft ADP private payrolls, slowing job openings, and dipping factory orders, have simultaneously reduced the probability of an aggressive Fed rate hike in September. And that's where it gets really interesting. For investors wondering whether the latest rally has already run too far, at least some gold bulls believe the recent breakout is a signal to increase exposure rather than take profits. So what does this mean for the future of gold and oil? Well, in my opinion, it's all about the bigger picture. The stabilization of energy markets has weighed on the US dollar, making gold cheaper and more attractive for foreign buyers buying in non-US currencies. Global central banks, especially in Asian markets like China, continue to aggressively purchase gold, adding a record 289 metric tons in Q2 2026 alone, in a bid to diversify their reserves away from the US dollar and sovereign debt. So there you have it, folks. The gold rally is supported by falling oil prices, which in turn are influenced by geopolitical tensions and central bank policies. It's a complex web of factors, but one thing is clear. Gold is looking like a smart bet for investors looking to diversify their portfolios and protect against inflation. So what do you think? Is the gold rally here to stay? Or is it just a temporary blip? Let me know in the comments below. And don't forget to like and subscribe for more insightful commentary on the world of commodities and currencies.